While many big companies have been holding off on investing in South Africa, automotive manufacturers have been investing in their local production facilities. Recent announcements include a 4.5 billion rand investment from VW South Africa to produce new models at its Uitenhage factory in the Eastern Cape by 2017. Goodyear, the tyre manufacturer, saying this week that it will plough around 670 million rand into its tyre factory also in Uitenhage to increase output. Joining us now in studio to discuss the local automotive industry is Jason Muscat, who's a senior industry analyst at FNB, and Matt Gennrich, GM for communications at Volkswagen Group South Africa. Good to have you both with us today, gentlemen. Maybe let's start off with you, Matt, just to get a quick overview as to the investment appetite for VW SA in the South African market. How does this come about where there's so much negative market sentiment driving away investment opportunities here?
Yeah, I think first of all it must be understood that Volkswagen has been here effectively since 1951. And we as a company are in it for the long haul, and we make long-term strategic decisions. And we don't make short-term decisions based on what may be happening specifically at that time. So yes, at the moment the economy is probably not in the best place it could be. And there may well be other issues in the socio-economic environment that we're in. But we're fairly confident, and it is a leap of faith for us, that we believe that there is a future here, there is a future for manufacturing. In addition to that, I think in South Africa, we have a very, very good legislative framework for the motor industry. And that gives us confidence in terms of based first on the MIDP and then the APDP, in terms of that our investment is secure and that it makes sense to produce motor cars both for the domestic and the export market. So without an ABDP, there obviously would not be the same sort of investment as we have now. So that's critical to the way that we work.
If I can pause you there for a moment, for the benefit of the audience members who aren't familiar with the APDP, if you can explain it further as to how exactly does it protect your investment here in South Africa?
Well, the APDP, or the Automotive Development Program, effectively does provide certain guarantees and certain benefits and certain incentives to the motor industry. And in very simple terms, it encourages investment and gives some benefits back for investments. And then most importantly, it also encourages exports. So for example, you need to produce 50,000 units per annum to get some of the incentives back, etc. So what happens is that if you export like we do, you gain certain benefits in terms of duty reductions, which you can then obviously offset also against your local production. And that also helps overall, and it's a lot more complicated than that, but in simple terms, it really helps to create, as a manufacturer here, some form of natural hedge against this current sort of currency fluctuation. That obviously depends to what extent do you manufacture, how many do you manufacture for export versus local. Importantly also what size car. So there's a lot of factors that affect that, but it certainly does help. And as I say, the sort of framework that we operate within gives us reasonable confidence that this is a good place to produce cars. We are only 0.6% of the world's motor production, so sometimes one asks that, but we certainly have a fairly strong local market. Yes, the market is declining, but it's still a fairly strong local market.
Exactly. I'm going to ask you to pause it there for a moment, because we'll venture into the export opportunities together with how much more market share we can gain. But to come to you, Jason, for a moment, these policies that we have in place, are they working to ensure that there is long-term sustainable development despite the short-term concerns?
Absolutely. I think, as Matt said, it's a vote of confidence. And while domestic conditions at the moment are not necessarily favourable, it's a long-term play. And I think if you look at what's happening in terms of domestic exports from vehicles, and in terms of what's happened with job creation, I think it's definitely working. I know there have been a few detractors, but I think for the most part it's kept a lot of investment in South Africa. We saw it happen not that long ago with Australia, when a lot of automotive manufacturers actually packed up and left.
Exactly. Let's talk about the export as well environment. You touched on that very briefly, and maybe if we can start with Jason first just to get your view. So often we look at the map of Africa and we see South Africa right at the bottom on the tip of the continent, which to many would actually make it seem as though it would be difficult to allow trade with the rest of the globe. But is that a threat or an opportunity here, given the fact that we have several ports as well which are up for development?
I think it's both a threat and an opportunity. I think the APDP is one of the primary reasons that we have so many global automotive manufacturers present in South Africa. And I think without the APDP, logically, it's not a sound investment. Africa certainly does present a lot of opportunity, but South Africa really is, we need to become a reliable producer of vehicles. And I refer to the labor environment, I refer to the electricity constraints that we've been facing. Those are some of the things that we need to tighten up on. We know that Nigeria is becoming, they have ambitions to be quite a serious player in the OEM space and trying to lure investment.
To come back to you, Glenn, just for a moment, I take it you're happy about where the rand is, clearly, given the fact that it also boosts
No, we're
exports
not happy
in this
at all.
particular?
As I say, it depends. It depends. We're still a net importer, so it's because in terms of the way that we structure our overall business between Audi, Volkswagen Commercials, and Volkswagen as a brand. But it certainly helps. That's what I'm saying. And it depends who you are as a manufacturer and what your specific strategy is. But I would like to add that South Africa is not a logical place to produce motor cars. And a couple of things that Jason has mentioned, there are labor issues. We're far from our markets. We have to bring components down because although in Volkswagen's case we have a 70% plus local content element, but we still have the imported content. And we have big logistics costs and also to, again, export the cars. But again, that's why you need a structured, a stable legislative environment that you can work within. Particularly when in other plants around the world, there may be some capacity constraints. There's another plant which you can use. And we've been here for many years, and it's really in terms of labor, which remains, particularly with the negotiations coming up next year, it does remain a tough issue. But we as South Africans and we as a country, we need to get together and we need to have a common view and we need to work together, not against each other.
Exactly.
That starts with government and goes right through to the parastatals.
Exactly. We'll leave it on that optimistic view. Thank you so much for coming through, gentlemen. Next time, hopefully we can flesh it out to get into more of the details regarding investment in the vehicle sector here in South Africa.